It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, September 14th, 2015. Hope you guys had a great weekend. I hope you're back on the horse, though, with me here. We got a short week. We've got pretty much the perfect storm brewing here this week. We got quadruple witching on Friday. We've got the FOMC announcement, think interest rates, on Thursday. Meeting starts on Wednesday. We got a bulk of news coming out. We've got probably rollover on crude end of the week. Really not seeing a lot of it affect us just yet, but we are coming out of rollover. I mean, there's a lot going on right now, and we'll be talking about all this stuff in tonight's newsletter, so stay tuned for that. We've got crude is bullish, rotating off the highs. Rotating off the lows of the range, moving higher. S&P is range bound, so we're looking for failures at highs and lows. Very range bound in the S&P after rollover. Gold is range bound and rotating from the low to the high, but it's a tight range, and we got a plan for that tomorrow. Euro looks absolutely beautiful with a bullish bias and a perfect channel and trading range for some easy cherry picking opportunities tomorrow on the euro. I got a great plan for you guys here for tonight's newsletter. Like I said, buckle your seatbelts here, kids. It's gonna be a fun ride. We got everything jam packed into this week. FOMC. We've got quad witching. We've got markets coming out of rollover. Markets going into rollover. That's why you tune in. I got my finger in the air. I think I got a pulse on these things. We'll put together some strategies for tomorrow. Before we jump into our charts, though, I do want to remind you guys here, make sure you're watching our newsletter video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube page, there's a link in the description of the video. It'll take you over here to our blog page. Bunch of reasons why it's in your best interest to watch this video at Sideways Markets. First of all, I got a free pass for you to come out and test drive our trade room. If you're not a member of School of Trade and you'd like to get a free pass for the trade room, grab it in the upper left-hand corner. If you never want to have to worry about missing another newsletter ever again, we have a nightly newsletter mailing list right above my ugly mug in the lower left-hand corner. Right below the video tonight, you can download all the charts you'll see me using in tonight's video. On the right-hand side, you can register as a trial member here at School of Trade. You're going to learn more with me in 1 week on my trial than you will anywhere else on the web, I can tell you that much. Membership information, member reviews, and we've always got someone standing by 24/7 to answer your questions. And like I always say, there's no question too big or too small. We'd love to be able to help you guys out with your trading career here at School of Trade. So don't forget, make sure you're watching the video on our blog. Buckle those seatbelts, though. We got a jam-packed newsletter in store for you guys here tonight. I want to start out here with, I know, right? Stay hydrated this week. It's a hot one here in Los Angeles. Summertime you thought it was over, but it's definitely not. We get those Santa Ana winds, and boy, it's been a hot one. Heat wave time, month of September in Los Angeles. Let's start with crude oil. Speaking of heating up here, this market's got rollover later on this week, right? 18th, probably on Friday. And boy, oh boy, look where we are. Right? August 24th to August 31st. Remember that big wild ride we had there towards the end of the summer? We were like, I hope this never ends, right? Incredible volatility. Well, that's created this huge range, and you can see where we are. We are just smack right in the middle of that range. Guys, you know what Mama says. Don't fiddle with your middle, right? We kind of joke around with that in our trade room, but it's very true. The middle of a trading range is always going to be the most difficult, right? This is definitely not no trade zone. I mean, we're definitely going to tackle this head on. I got a plan for it. But just be aware, though, when you see a market like this, right, in the middle of that long-term range, right, it's going to be a little bit sloppy. Now, you'll notice we've broken this into some quarterly increments here right on down. Real simple math here. And this will work on fast time frames, slow time frames, any market, just breaking these ranges into quarters. And you'll notice I took this top quarter here, and that's what we're going to focus on here right now, because what you want to think about is rotation. Now, you can see they've defended this area really well, right? 43 has been really tough to get to and stay over the past few weeks, over the past week and a half here, ever since we got through Labor Day. But you can definitely tell, though, right? There's a big old wick on that 9/11 candle, right? That was September 11th, that big wick right there. And that really told us that they were willing to defend this. So we're going to look at, first of all, rotation back and forth inside of this area here. But you got to be open-minded to What I would think to be is going to be a stop run to the downside. I might be wrong on this, but what looks to be the case, we look at this kind of wick down here and we think, okay, well, they definitely tried there and clearly defended that 43. Take a look at this ABCD coming down now, and you can see we're going to measured move sitting just below 42.5, right? That would be a little bit lower than we've seen it go so far. But something tells me, though, that's probably not going to last, right? So if we, again, scenario one is going to be rotation now back up into this range, right? And that's what my gut tells me we're going to see at least for the rest of this week until we get through this, quad witching and through the announcement on Thursday, right? Interest rates, the announcement at the FOMC. But again, if we do break down here, that's where you're going to be looking for that breakdown to happen. And then it honestly shouldn't last very long. It should get pulled right back up in just because of that big wick. Unless something dramatic changes that, right? Later on this week, we may see a different tone. This market feels very heavy right now, so I wouldn't be surprised if it did. But this kind of gives me This definitely gives me the more of a long-term outlook here that if we do make a run for it this week, it doesn't look like it's going to be able to get that much further. And if it can't get out of this range, which is what my gut tells me is probably going to happen here, just because there's a lot of questions on everyone's minds right now regarding the end of this week. So we definitely will zoom in and hone in on this short-term trading range. Knowing that, though, if we do break down, we may have some short-term selling opportunities on the way down to that 42.39, but again, it may be relatively short-lived, just because we got some clear defense of this area here, and then with a measured move, usually those measured moves, they don't mess around very much. So just be careful if we do make a run to the downside this week. Leave some runners to the downside, but be realistic with your expectations. All right, we're going to check in on this later on. I'm not a swing trader by any means. I'm going in and out in a matter of minutes every day, a lot of times in less than a minute. So I just wanted to give you guys a heads up on that bigger picture. I am more, of course, of a day trader. In fact, a lot of people would say, day trader? Yeah, right. You're more of a scalper, right? Short-term scalper. I really am. I'm in and out of trades relatively quickly. I like it that way. It's easy to know where the price is going the next 10 minutes. I get a little foggy where the price is going the next 10 days, right, or 10 hours, right? This is a crazy world we live in. So I think the easy money right now is definitely made in the short term, but again, that's what I focus on here at School of Trade. It's just an easier way to do it, in my humble opinion. So let's now zoom in now on that smaller range that we talked about earlier, right? This is that quarter range, right? That kind of upper, just above that halfway point here on the bigger picture chart. And as you can see, here we are. We've got that $5 range, and we're in the lower half of it, the lower quarter of it, right? And you can see bouncing off the low of that. And again, I don't want to confuse things. This is the long-term range on this day trading chart. We're down at the lows of it, and now rotating back higher. Really what I see on this chart right now is we're down smack at the lows of the $5 range this evening, and the buyers appear to have held the lows in the short term. Our plan is to follow this move higher, looking for short-term buying opportunities. The key word is short-term, because we do have an ABC that's setting up here as we go higher. I have no idea where this ABCD is going to put us, because I don't know the B point yet. But that's going to be something we'll be watching here for some good targets later on this week. So keep an eye on that ABCD. Again, I'm not that good. I do pretty well out there with this stuff, but I'm not that good. I can't tell you exactly where that ABCD will be. But if I had to guess, I would guess, we rotate up to that. If that's a quarter range, this is probably, an eighth of a range. So up to the eighth of a range, I know we're getting real technical there, but look for that to be your measured move. Again, you got to wait for more information on that. That should put us back towards the middle of this trading range here, right? Towards the middle of that area here, and that's really where we kind of know this price is going to want to go to in the short term. Now, with that said, if you remember from last week, we have this. Remember this from last week? This spike in channel. Remember this bad boy from last week, right? Last Friday, we called for a deep correction, had a beautiful selling opportunity when the buyers tried twice and failed, and then had a great chance to buy this correction last Friday, and we made some good money on it up until the end of the week, right? Remember this from last Friday? We got that deep correction we were expecting. So, selling opportunities in the correction, and then it was beautiful, right? I mean, if you were with me last week, if you followed it last week, it was a beautiful opportunity, but it just kind of ran out of gas. So, I'm never going to hold a position into the weekend, so I'll put my stop at the point of entry. If I get lucky over the weekend, perfectly fine by me, but I can't. I don't sleep very well with open positions over the weekend, so it comes back in. Sunday evening stops me right out of the position at break even, so I get a little bit on it, right, holding it back to the highs here, but not that much. And so now we can tell it's feeling very heavy, right? It's definitely feeling heavy. We heard from OPEC this morning. OPEC even came out, which I'm somewhat surprised. If you remember last week, I think it was Goldman who came out and said it looked for $20 a barrel next week. Now, guys, I also distinctly remember Goldman at the end of last year telling you to buy crude futures last year, and I remember selling right into that guidance. And I'm not gonna make that gospel from Goldman Sachs, but they seem to have a good feeling about $20 a barrel. Today, OPEC mentioned slowdown in China, slowdown all over the rest of the world we're seeing right now, also could have that demand coming lower. I'll tell you right now, I trust Goldman Sachs more than I trust OPEC. Right? In all reality, what I trust most is the chart right now. And as you can see here, sellers have clearly failed off that low. No real surprise. Again, we're going into a big deal, big weekend ahead of us, or big week ahead of us. So I don't think we're going to get any major breakouts of this. So right now, you got to follow those buyers holding those lows. And I would go short term, looking for buying opportunities now. And you've got really easy targets. Until we have more of a measured move, your target's going to be these quarter point increments. I've got what I call a phantom trend line. This is just a phantom trend line. This is a range. So, these trend lines, they're effective, but I'm not going to go build my career on these trend lines and build the ranges. So you've definitely got some targets waiting for you overhead that I've circled in green. Again, once I know more about this ABCD, I'll be able to give you more direct guidance, probably tomorrow morning with us in the trade room. And really, the only thing we really know for a fact right now is this channel rotation, right? We've got this real narrow channel. So, really what I've been looking for here is a rotation inside the channel, up around this 44.50. Then let's get a breakdown. Let's look for these sellers to try and fail a few times here and then buy this sucker. That'll complete that A, B, C, D. Difficult to tell where it will get, but that's definitely what I'm looking at right now. So the keys right now on crude oil are coming off of these lows, trading higher at range lows, rotating off the range lows, right? Remember, we know that markets love to rotate, right? If we didn't know that from last week, right, we really got to do something better to communicate that with you, because last week it was just money flying out of the sky into our trade accounts, because those trading ranges last week was great. Bull channel rotation, and you really look at it as, I look at this as, these are all short-term increments. First try from the sellers to break out, right? The first try by those sellers to break down fails. You're going to get one more, right? They're going to try one more time here to get short on this thing, and that would be, again, this kind of feeds right into A, B, C, D. So if you missed the buying opportunity off the low today, and I can easily see why you would, because we had a real strong bearish market until the end of the day, but definitely keep an eye out for that correction back lower, around that 44 to 43.87 for the next good, decent buying opportunity here. And then again, use those range levels above, along with that, what I call a phantom trend line. Use that above here to get your targets off here. We'll be trading this in real time tomorrow. Oh, and one more thing. If we do happen to collapse down here, we get a long-term measured move and a range expansion target. Right now, I think the lower we go, the more enticing the buy is, just because of what we know is coming. But again, we'll be trading this real time tomorrow morning with you guys. So come out and see us. Next up here on the S&P. Ooh, boy, you might want to get the kids out of the room for this one. This one's a very ugly chart here. It makes sense, right? It makes sense. I mean, we're talking about raising interest rates at the end of this week with FOMC announcement on Thursday. We got quad witching on Friday. This thing just came out of rollover. I mean, this thing's like the Three Stooges, right? When they're right there, they're slapping each other on the face back and forth. That's what this S&P feels like right now. You can see it's right smack in the middle. And so the S&P trading sideways in the middle of the long-term range this evening, which tells us exactly where the high percentage trades will be found. And I'll give you a hint. It's not right here. This is not where I want to be trading. I want to fade these breakouts at the highs and the lows of the range and at the wedge. If you remember this from last week, that was exactly what our plan was last week too, and it worked, well, as you can see, it's worked pretty darn well. So be patient. Wait for the failures at the highs, wait for the failures at the lows, and then look at the notes here on the S&P, and this really kind of screams that, and I think it gives you a really good idea of the short-term look in this is. Look at that volume. I mean, just look at the volume. The volume is just screaming at you, right? These buyers and sellers just love this 1940 area. A lot of volume piling up. I mean, literally, there's absolutely no volume on the tail here. It's, I don't use volume very much. I don't use volume at all for my entries at all. It's worthless for entries. But looking at this, though, I mean, is there any question about where the real value is in this market right now? Again, shouldn't make any surprises here. I mean, look what we have this week. Again, just came out of rollover. We've got quad witching on Friday. All four asset classes expire. We've got the news from the FOMC, right? I mean, I'm surprised it's not the S&P's birthday this week too. You know what I mean? Yuck, yuck, yuck. Right. Anyways, so the S&P trading sideways, volume smack in the middle. We're right at the 50% of the range, right? Don't fiddle with your middle. We know that from Mama Says. And then what I really want to focus on here is these trend lines, right? Sell the highs, buy the lows. Now, one thing you got to remember about these trend lines. Do not take these trend lines as just specific lines, right? What you really want to think of these trend lines is that ranges. I mean, what I really should do is really fatten up these trend lines because that's really what you want to think of them as. So what I want to see is I'm not looking to sell the trend line really. I'm looking to wait for it to go through that trend line, try to go higher and then fail right back down in, right? Go down lower and then can't keep it going lower, right? So what you're doing is, and remember, market personality says buyers and sellers love to try things twice before they give up. Just like I tried to learn to speak Spanish, right, twice and then gave up and just went the electronic way, right? Human beings are always going to learn or try to do things twice, and they'll give up, right? It's human nature. And, of course, you know who trades these financial markets. It's not robots. And someday it will be robots. And you know who will program those robots? Humans, right? So we know that this market, like every market, will try twice. You can see what's happened here. I've kind of labeled them, and you can kind of see the personality of it, right? Sellers try once, sellers try twice. Nope, can't do it there. All right, well, let's try up here. Buyers try once. See, you're probably going to get a second try here to get up towards those highs, right? I can't predict the future, but that's typically what will happen here. So be looking for those buyers to try again, right? Does that mean that I could be a buyer in the short term? If you wear your helmet, you can, right? The problem right now is, look where we are. To tell you to buy this right now would go against everything I believe in regarding technical analysis. But it does make sense, though, that this price is going to want to get up there. The problem is that what's likely to happen here is we're likely to see this price really struggle to get up there, and then it will go, see ya, suckers, and come right back down. So the question is, do you want to swim against the current or do you want to go with the current? And what I always tell my students is that make sure you save a few bullets left in the chamber to get short off the high. Because what happens is traders come out, they can't keep their fingers off the buttons. They try to buy this stuff. It gets so sloppy at these highs. You get stopped out a few times, right? You kill your account, and then you're shooting blanks. You've got no more confidence. You've got no more money, right? Our pets' heads are falling off at this point, and we're ready to collapse back down in, right? You probably know the words to that song, right? That's how I know what's going to happen because I've done that before. So 2 tries to go lower, 1 try to go higher. We're expecting a second try. So if you want to be a buyer right now, just be careful. If you want to be a buyer, I would definitely be looking for seller failure, right? So look for those retracement trades to fail and buy into those stop losses. And then, again, where would the best areas be to be a buyer and a seller right now? Well, keep an eye on the quarters. I think the quarters are going to be your bread and butter. You get the 1957, you get the 1924. If I had to guess, it just looks like that's really going to be where your best bets are. So second try comes up, they fail, back down in. Again, it should go higher here, but I can't predict the future. All I can do, like any other mortal, is I can go out and I know where the highest probability trades are going to be. There's no directional bias to it right now, I'll tell you that much. This thing is flat as a board. And of course, again, buy those lows, sell those highs. Don't fiddle with that middle here on the S&P. Let's keep going here. Let's keep going. We got some really interesting ranges here on gold and then euro to finish up the newsletter for you guys. Gold is range bound and bullish in the short term as price rotates from those lows up to those highs of the range. Our plan is to look for very short-term buying opportunities as we rotate back to that range high to test the range highs and hold a runner to that ABCD. Resistance is overhead, and because we're in a trading range, okay, with a bearish bias, I'll show you guys that in a second, we're definitely going to be looking for selling opportunities. So now that you guys are an expert on rotation, right? Now remember, remember that big sell-off that we had last week on gold, right? Whatever the heck they wanted to blame it on. I don't know why. I don't really need to know why. But price dropped lower. That gave me a bearish bias to this. That tells me that every time price goes up, we want to sell this sucker back down. So we do know that being a buyer here right now, you're going a little bit against the current. But what that really means is you really got to be careful trying to buy this break higher. We're definitely going to be able to get this price to want to go back to its highs here just because, as you guys know, sellers tried once, sellers tried twice, they barely missed. They got once, the buyers tried twice, right? They should be able to get back up to that high here on the gold eventually. So we should expect to see rotation back higher. But you need to be aware, though, there is a bearish bias in this market right now. You can see there's an ABCD on this chart, ABCD. So the buyers out there, you've got some definite opportunities here on the rotation back up towards these highs. Just don't get too greedy because you've got the range high and you have range high and the measured move resistance overhead. If you do want to hold one more bullet, you get the 1116.6, but that's about where it ends right there. Then you would definitely be looking for 1 try, 2 tries to sell right back into it. All right, so short-term buying opportunities up to the measured move. And again, don't forget about that range high there, 1119. That's going to be your midterm target. And then you get some longer-term targets waiting for you overhead. Be very conservative, though, on this market this week ahead of that FOMC report. Remember, FOMC, when you think FOMC, you want to think GC, right? Because it has a huge impact on gold futures. So some of the notes here on the gold. Rotation back to the highs. Bias is bearish. What really is interesting is look at those sellers, right? I mean, literally, they went, no, can't get it. All right, we'll go back in the opposite direction then. You could almost feel those buyers going, ha, gotcha, and taking it right back up. So definitely looking for them to complete that cycle back higher. Now, the only scenario where I would expect that not to happen and come tumbling back down, we already got the first try from the buyers. Wait for that second try from those buyers. If they can't get that high tested, it will come back. And those sellers are going to shove this thing right down those throats of those buyers because we know one thing is for sure. Well, one of two things is going to happen when you see those sellers barely missed. Either one, it's unfinished business and you know they're coming back at you. or two, you can kind of feel the collective sellers throwing their hands in the air going, hell with it. Let's just go back. If you can't beat them, join them, right? They get stopped out at their high here, and it pushes this price right back up towards those highs. So A, B, C, D, channel rotation, right? We're definitely looking for a second push higher here right now on the gold. Watch closely here in the overnight and tomorrow morning's pre-market ahead of the opening bell, because if we get a second attempt that can't make it, it's going to come right back down and finish off what they couldn't get done, right? Almost like the Grim Reaper coming there and saying, I wasn't done with you. You got lucky on that one earlier today. So keep in mind on that. Don't forget, most important thing right now in the gold is be conservative, sell those highs, buy those lows with a bearish bias because of the sell-off leading into that range. And then, woo, what a gorgeous chart we have here on the euro. Last but not least here on the euro trending higher with a short-term trading range, and we have an overlay with that channel and volume profile, which just looks tasty to the upside right now. Look at all of the volume that is just there. These buyers are loving this higher price right now. You can see they're casting their votes, right? Lots of traders participating up here as this price goes higher. So excellent identification of some buying opportunities near the lows of the channel, the lows of the range. And, if I had to guess here going into tomorrow's session, I would say, as you can see, rotation, right? Bullish push into a trading range. That means the bullish bias is in play. I would love to buy these lows down here. That's the first thing we know. That brings in some of our notes here for us today. Bullish channel tells me, look to buy the lows, right? Bullish channel, look to buy them lows. That looks good to me. A bullish spiking channel that we saw last week still has not been completed. Get a measured move waiting for you up there as a target. We get the bullish bias, that trading range, and again, the volume. So if I had to guess right now, rotation. Buyers tried once, buyers tried twice, right, to rotate to the highs. Success. Sellers try once, sellers try twice. So really, the key right now on this euro is just stay patient. Just stay patient, because one of two things is going to happen. A, the second attempt by the sellers fail and we're going higher by default. Or B, the second attempt from the sellers gets down and hits that low and we're going to look to buy it there. So the key word right now is, or two key words, bullish and patience. Patience, grasshopper, patience, right? We know we want to wait for that price to try to make that second push down. And that second push down, which of course you now know, right? The market's tried twice. If the second push goes down to the lows of the range, that's a beautiful place to be buying it from there. If that second push falls short of that range, you won't really know it until the sellers and can't keep it going lower, right? Two tries with the sellers to keep it going lower. They fail, buy right into those stop losses, while at the same time, it's a pullback to the point of control. Beautiful opportunity there. A pullback to the lows of that channel. The list just goes on and on and on. That's why I can be so specific about that right now. There's a lot of smoke billowing out of the bullish smokestack right now, and it looks like they got full control of this market. So wait patiently here. Look for those sellers to fail either prior to the lows or at the lows, and that'll give you your best buying opportunity. Boy, oh boy, we get a jam-packed week in front of us. Don't forget here, before we go here, they have, at least on this schedule, I've got the FOMC on Wednesday with the announcement on Thursday. So Thursday and Friday are ultimately traders' holidays this week. I'm also going to be out of the office on Thursday and Friday this week, right? My compadre, my protege, Mr. John Henry, will be running the room on Thursday and Friday because it's quadruple witching this week. So I'll be here with you guys Monday, Tuesday, and Wednesday evening on the newsletter. No newsletter this week on Thursday evening because it is a trader's holiday, and I've got some self-reflection to do, which we talk about in our beginner's course, right? Scheduled breaks from the market. Every 3 months we have quadruple witching. At the end of this week is what I call that trader's holiday. That's the time for traders to go back, reflect on their trades. We'll talk more about that later on this week. So just be aware. Thursday, Friday this week, we got to make our money before we get there. It's going to get pretty nasty as we get later and later. Guys, don't forget, head over to schooloftrade.com, join the free trial. You're going to learn more with me in a week on that free trial than you will anywhere else on the web. I can guarantee you that. I take a lot of pride in the fact that our trial is great. We have beginner, intermediate, and advanced levels of membership, so everyone has a place here at School of Trade. Everyone. And don't forget, being successful in day trading is just like being successful in anything else. It's like opening up a combination lock. It's not enough to just have the numbers. You've got to know the sequence. We specialize on giving you that sequence and really helping you launch a professional career as a day trader the right way, the safe way, the effective way here at School of Trade. Guys, I could go on and on about these markets all day long, but I'm out of time. So make sure you give me some feedback. I'm JJ at School of Trade. Share this video with a friend. Join the trial. Join as a member, and I'll see you guys in the manana. Tomorrow morning, 8 a.m. Eastern Time, we open the trade room up. Tomorrow evening, 8 p.m. Eastern Time, we'll have our newsletter broadcasted again. Now you know the plan. Be well out there, guys and gals. Be nice to each other. My name is Joseph. Adios, amigos. Bye-bye for now.